We'll continue with our exercise, the one on question 5, whereby we're drafting the statement of profit and loss. I guess you all still remember. The exercise is questions, example number 5. Example number 5 on the study guide or on your learning unit, because things changed. On your learning unit is on page, it starts from page 53. Learning number 3. Okay, do you see this example where we were on administrative expenses? Then we calculated, I think we calculated everything up to so far, because this part, it gives this total, and then when we say 1.8 minus 500, it gives us 17,174,2500. Then we put the interest paid, the other income which we calculated on top, the one which we had done is here, and then the distribution cost given. So when you say 1,742,500 less this, and I mean add this plus this, how much do you get? How much do we get? We are only in number 3, example 5. So the 171,118.50 to be represented as our administrative expenses. We all happy, right? Then we continue. What's the next thing? It will be the operating expenses. So are we given any operating expenses? From what I was checking, we don't have any operating expenses. So it means our operating expense will be nil. Then we proceed. We're going to have the finance cost. The finance cost that we have calculated up to so far, we had how much? The interest paid. We had a value to the 19,900. Can you see this calculation?
Yes.
Okay.
Where did you get 5,000? Because I do see 8,000 and 5,900, but they are the interest on overdraft and
Okay. Here's the 5,000. The 5,000 is this one. The interest on loan. It comes from the adjustment. If you can check, they will say they took a loan from whoever bank, and then the interest is calculated at, I think it's 10% per annum. I will check the adjustment, then I will tell you which adjustment. Just hold on. The interest on loan. The loan part. Anyone who see the loan can also, adjustment number 5. You see adjustment number 5. They say they took a loan.
Oh yeah, I see. The unsecured long-term loan. Okay. Oh, right. Okay. So.
Yeah. So it means our interest on loan will be 19,900. Do we agree with that 19,900?
Yes, sir.
Okay. Then we put 19,900. The finance cost. So for those which they weren't in last week, the abbreviation mentioned in green here is for the method which you have to use when you are drafting the statement of profit and loss. Remember, with UNISA, we are using by function, not by nature. So when you are using by function, you're going to use this method. That abbreviation is the one which is going to guide you how to write these things, because remember, you are presenting them using IFRS. We are happy?
Okay, sir.
So what next? It will be the calculation of the profit before tax. Profit before tax. So when you say 1.8 plus this minus, then you should give me value. How much value do you get there? I want people to participate so that we can be on the same page, not myself talking alone.
We are still calculating, sir.
Yeah, I know. I will give you. Yeah, I want the total of profit before tax. Yes.
It's 57,500.
You get 57,500. So the 57,500. You see it shown here is a profit before tax. Are we aligned?
Yes.
Okay.
Yes.
Then after the profit before tax, what's next? It should be profit for the year, right? Or we should have income tax.
Income tax. If we have any adjustment for income tax, then income tax.
Yeah, let's check the pre-adjustment trial balance. I think should say something about income tax. Our income tax on the pre-adjustment trial balance, they gave a value. We had the provisional tax, and we have it's either can be on adjustment or it can be
Provision taxation paid 8,000.
okay. Adjustment number 8. What's that? This adjustment number 8. Normal tax is what?
Normally, company taxation of 11,368 and a dividend on ordinary shares at 50%.
Yeah, so we're
gonna 50 cents.
So let's focus on that normal tax part now. So it means our income tax expense will be 11,368. We are all happy. Then profit for the year. You say you are profit before tax minus income tax expense.
That is 46,932.
We have a profit for the year of 46,132.
Wow. Yes.
Cool. Then now it means we're gonna add new things. So now we must have other comprehensive income. Other comprehensive income will involve the things happen due to the revaluation, if there is any. So it will be the revaluation. And then there will be gains that came as a result of the financial asset. So how do we classify financial assets? Do you see the investment which they were made on adjustment number? Adjustment number 4.1, 4.2, 4.3. You remember those things? We've got Abigail Limited, a subsidiary of Rainbow, which acquired 10,000 shares. We've got Bully Limited listed on JSE. We bought shares for speculative. So if you bought shares for speculative, those ones, they are for trading purposes. So whatever gain we realized there of 10,000 is the one which we recorded on the income from, it was recorded here. Income. This one. The amount, it was how much? We had the shares were valuing at 50. So we're going to say 1,000 multiplied by 50 less 40,000. which is 10,000. The 10,000 will represent this. You see this one. So this was for trading purposes. It's not going to affect OC because remember this 10,000, you also showed it on your thingy. You show it on your other income. If you can check your other income calculation, the 16,050, it also included this 10,000 because the 10,000 plus 1.3, then plus this, they give you 16,050. For those which they were not here last week, this other income of 16,050 also include the shares of 4.2, the one for Blue Limited. So Blue Limited is already taken out. We are no longer including on other comprehensive income. So now let's focus on 4.3. The 4.3, we've got investment of Cream Limited on unlisted, and the shares were acquired specifically not for trading. So it means these shares, we bought them specifically for investment. So since we are investing them and they are not for purposes of trading, so they're going to represent other comprehensive income. Are we clear there?
Yes.
So since they're going to represent other comprehensive income, the market value on the date of financial year end is how much? 20,000, right? As shown on the pre-adjustment trial balance, they say the director's valuation on 28 February 94, it was 20,000. So we're going to say 20,000, then less the amount which they purchased them. They purchased this 200 ordinary shares by what? By 16,000. So the 16,000 was the cost price of the shares. So now we want to know how much did the share increase or in value? How much did we gain from these shares? We gained the value of how much?
4,000.
4,000.
So we all happy, right?
Yes.
Okay. So we write 4,000 as our other comprehensive income, as our gain on financial assets, not held for trading. Remember, this one, they are not held for trading. Not held for trading. Then the revaluation. The revaluation. Let's check adjustment. That's talking about the revaluation. I think adjustment number 2, somehow should include revaluation. They say the existing landowner occupied and situated on F11 Road Hood Park was purchased on 1 March 91 for 50,000. The building at cost was 450, were completed on this date, and on 1 March 93, the land was revalued by Son Price. Now on 1 March, the land was revalued from whatever amount to 200,000. So now we're gonna say 200,000 less the amount we purchased. We purchased for 50,000, right?
Yes.
So it means our valuation is 150,000. We all fine with that adjustment.
Yeah.
Adjustment number 2. So now we can conclude our other comprehensive income. So we will say 150 plus 4,000, they give us 154. Then we say 154 will represent our other comprehensive income. Then total comprehensive income, you will say 154 plus 46, 132, which would give us how much? 232.
132.
Then this will be a total comprehensive income. So this total comprehensive income, for the presentation purposes, you're gonna show this. You're gonna say now the profit is attributable to owners of the parent, and then total comprehensive
Income.
and then you say total, then it's just value. So income. Then profit attributable to owners of the parent, it will be how much? It will be this one.
46. It will be the 46,132.
And then the total comprehensive income represented by 154.
154.
Then the total is again 200,132. Up to so far, any question with the statement of profit and loss? Any question?
Can I ask what that part below total on the comprehensive means on accounting, because it's new to me.
This part?
Yes.
Refer to this part. It's for presentation purposes. It's for presentation purposes. We want to show the profit we got, which represent for the parent. For 602 concurrently with FAC2601, they will understand this part though. For here, we want to show how much represent for the parent company. And then suppose there was a subsidiary, then it was going to go further here. They say non-controlling interest is how much. So it's like if the company bought another shares in a subsidiary, in the company bought another shares in another company, where that other company form a subsidiary. Now you have to show that, okay, this is for the parent company. Out of this profit for the current parent company, this one is for subsidiary. Let me show this in a detailed so that you can understand the same information that we see here. Suppose now we are having the parent and subsidiary in terms of FAC2602. We're gonna do this. We'll say owners of the parent. So instead of 46,132, let's say this company is a group. So the subsidiary is owning 20% here. So we're gonna say 46,132, we minus the 20% part. So if you say 46,132 multiplied by 80%, then it means it's gonna give you the amount which represent the parent. 46,132 times 0.8. So the
36,909. 905.
Let's say 901, round up to the nearest. 901 will be, I'm gonna say 906. So it will be the owners of the parent, then the non-controlling will be the difference. Non-controlling. This is for FAC2602, for the one which is you want to understand why do we have to put this. So non-controlling interest, it will be the 20% part, which it will be the 47, 146, 132 minus 36, 906. That will be the 20% part. 9226. So when you add the 2, it will give you 46,132. The same apply. When you do the total comprehensive income, you can also show the same percentages. We are fine. Okay.
Yes,
any question? No question. Can we proceed? For the one who said she joined last week, now are you following this thingy? You just have forgot the name of that lady.
I'm lost. But anyway, there's nothing I can do because you guys are far.
Okay. What make you lost? Just because you were not in the class last week?
Yeah, because I wasn't I'm not following the other things, and then
this was just a presentation of a statement of profit and loss. So there's nothing new here as far as if you did FAC in the first year. Nothing's new except this part. This part is the one which can be new to you, but all information was just straightforward. Like the finance cost was straightforward. The way we calculated is shown here, the 19,900. It shows here the 19,900. Wait. Elsie, can you mute? Thank you. And then we have the operating expenses. It was not there, not given. This one is they were complex, but normally they will give you this in the exam. So you will follow.
Sorry, let me just stop you right there. Let me ask a question. Operating expenses. Is it like salaries, transportation, fuel, all those things?
Yes.
Okay. The only the difference, what did they add on operating expenses that I don't know from the previous year?
It involved a lot of things. Like you see, on this calculation that we did for operating expenses, it's just this one was a complex calculation. Let me go back to that calculation. But remember, on our side, we don't have operating expenses. So I don't know what confuses you because we don't have it on our side. We have admin.
Okay, I just wanted to just check if they were there because I didn't even have time to go through the.
Yeah. You see, operating expenses is 0. They don't have them. They only have the admin part
to do the example. So
yeah.
Okay, it's those things that I
normally,
know.
Normally, don't worry about this. You see these things, 1, 2, these things, this one. In any question, they will give them straight.
Okay.
They're not gonna, unless they say excluding depreciation, like they just want you to take depreciation into account in that the administrative expenses.
Oh,
that's the only thing that they can do. They will say you are given this cost excluding, then you have to add it.
Oh, okay.
Now we can proceed. We can proceed to the statement of changes in equity.
Okay.
So we are doing the books of who? Rainbow. Statement of changes and equity for the year ended 31. Is it 28 February? 28 Feb. Let's use 2014. Then we're gonna have the columns. We have shares, ordinary shares. Then we have preference shares. Evaluation. When I'm doing this part, please listen very carefully, especially in change equity. Let's make sure that you listen very carefully. In most cases, it's complicated. If you don't understand, stop me. Don't just proceed while you don't understand. So normally these columns, they are not given. You just have to figure them out. So we have balances at the beginning of the year. So the balance at the beginning of the year is which date? 1 March 1993, né? So we'll use 1 March.
Yes, 1 March 1983.
But on our side, we'll use 2013, né? How much was the balance at the beginning of the year with regard to the ordinary shares? You want to try?
It was, yes, I will try. For ordinary shares, it was 500,000.
It was 500,000, which they say they were issued at R1, né? So
Yes.
on the SCE, please remember we are dealing with values, né? So here we deal with values.
Yes.
Okay, so the 500,000 ordinary shares were issued. The value is 500, which is 500 number of shares times R1 is 500.
Yes.
I agree with you. What was the balance on preference shares? Someone try? You tried at least. Someone to try? Preference shares?
100,000.
100,000.
Yes.
Okay, 8% preference shares, the value was 100,000. Did we have any balance on revaluation surplus?
No.
The market to market reserve?
No.
No.
What was the balance on retained earning?
It was 151,900.
Accumulated profit. Where do we see it? Retained earnings on the pre-adjustment trial balance.
It's on the trial balance.
Yeah, just under profit before tax. They show 151,900. We are all happy, right?
Yes.
Now we can continue to think that.
Yes.
Yeah. Now, listen very carefully, as I said. Additional information. Can you see it? Where is that? Can we see additional information where it's that, right?
Yes.
They say on 1 March 93, the directors of Rainbow Limited decided to do the following, which must still be. Please underline that statement, which must still be. It means those things, they are not yet recorded. You get it, right?
Yes.
Sometimes they say, listen, sometimes they say, on 1 March 93, the directors of Rainbow Limited decided to do the following, which had already been taken into account. So if they say they had already been taken, it means where are these balances that we were doing, this one we were given from the pre-adjustment trial balance, they were supposed to be the balance at the end, meaning we will be doing our SCE on reverse. Ne? So make sure you when you read carefully this statement. Must still be or already had. If there is already had, it means that whatever balance that you see on the pre-adjustment trial balance, there will be the balances at the end. If it must still be, whatever balance that you see on the pre-adjustment trial balance will be the balance at the beginning. I guess we are clear. Ne? So let's proceed. Now we're gonna have adjustment number 1, the 1.1. They say the directors they still need to issue 80,000 paid up ordinary shares, capitalization shares to the amount of this. They have to write off share issue expenses. And then I think on the thing we also saw the proceeds on the issue of share. Check line number 3 on pre-adjustment trial balance. Can you see it?
Yes.
What does it say? That's line number 3 on the pre-adjustment trial balance.
Proceeds of 50,000 new shares issued at 65,000.
At 65,000. So we're gonna say we have the proceeds on the share issue. So it will be share issue.
Mhm.
In value is how much? 65,000. But they issued how much? They issued 50,000. So it means the price will be 130. If you say 130 multiplied by 50,000, it will give you 65,000. We are all happy, right?
Yes.
So the 65,000 will go to the total. Then the next one will be that capitalization of shares. How much capitalization shares was done in number of shares?
80,000.
And then in value?
Yes.
80,000 also.
It's 80,000.
80,000.
And then what did they use to do this capitalization? It was fully paid. Then mean it was fully paid. It means they were using what? The reserves. They used their retained earnings. So we're gonna say on the retained earnings, we minus 80,000 for the shares issued for capitalization purposes. We are all fine. We are fine, right?
Yes.
Okay. Then let's proceed. Then we have share issue expense to be written off as per adjustment 1.2. Share issue expense written off. Share issue expense written off. How much?
4,000.
How much? You said it's how much?
4,000.
I can't hear. I just hear 1,000.
It's 5,000.
Share issue expense written off is 5,000.
It's 5.
Where do you see the
I'm
5,000?
seeing 4,000.
4,000.
I'm
The other
seeing
one say
4,000.
the other one say 4,000. The other one say 5,000. The
I'm
5,000 where is it?
saying that.
Where is the 5,000? Me, I only saw 4,000. So the share issue expense should be 4,000 to be written off. So where do we write it off?
Maybe under ordinary shares.
We're gonna write it off from the retained earnings because we have to take it from. It's an expense. We have to take it from our profit.
Okay.
And then another thing to be written off is what?
Preliminary expenses.
Preliminary expenses. To the value of
3,000.
3,000. And then the debenture issue.
It's 2,000.
2,000.
So the debenture of 2,000, do we have to write it off from the retained earnings? We did say something about it, this debenture issue. Let's see our calculation. You see, here's the debenture issue. You can't write it off again. You see it here. On the administrative expenses. So we no longer write it off. We can't write it off twice. So we are done with writing off the expenses. So now we proceed. What is the next thing to be done? We're gonna go to the revaluation.
Just before you move on, I wanted to ask, how do we know that 65,000 belongs to ordinary shares and not preference share?
Oh, they said the 65,000.
Yes, sir.
It's just given straight. That information, it says they say the proceeds of 50,000 new shares issued. It's not 8 preferences. But if the preference say they were gonna tell you that the process for the issue of preference shares, and they have to give you how much shares were issued at what rate.
Okay.
So for the fact that they are silent, you must assume that is gonna go to the preference shares, because I mean to the ordinary shares, because the one for preference, they will tell you it's for preference shares at this percentage, and they were issued on this date, so that you can be able to calculate the value of the dividend that you're gonna pay towards those preference shares, if there is any.
Okay. Thank you, sir.
Okay. So what left here is my revaluation. We had the revaluation done during the year. You remember, right? From here. From here.
Yes.
You remember this information?
Yes.
Now we have to take this information and we put it on the statement of profit and loss. Because remember, the statement of profit and loss, the profit is only focusing here. So now we're gonna add total comprehensive income. So our total comprehensive income, it will be all these things. We're gonna add these things. It's the profit that we generalize during the year. So we're gonna say total comprehensive income how much did we have for revaluation?
It was 154 in total.
Then for revaluation, it's how much? $150. Then the one for market to market reserve, it was not there. The market to market reserve, we're gonna use that 4,000. You remember the 4,000 is a gain as a result of shares acquired for not for trading. That 4,000, we're gonna use this 4,000 on the market to market reserve. Ne? So this 4,000 is the one feature here. And then the 150, this one. And then the 4682, it's gonna come here. So here we're gonna have 46,132. We are all clear.
Yes.
Yes, sir.
So this is the total as was shown here, 200,132. So this is the total comprehensive income. The revaluation on the revaluation column, the one we realize as a gain on as a result of the shares acquired, it will be market to market reserve. The profit we realize it's gonna affect the retained earnings. Now let's declare the dividend. The dividend. Okay, someone is talking. Priscilla,
Yes, sir.
are you saying something?
No. Sorry. Sorry.
Okay. So the dividend paid, we're gonna. Which dividend do we start with? Based on the line number 1.
Preference shares.
We're gonna start with preference shares. Are our preference shares cumulative or non-cumulative? Cumulative.
They're non-cumulative.
No, I didn't see anything about cumulative. So my assumption is that they are non-cumulative.
They are non-cumulative.
Yeah.
Okay. So the preference shares, we must pay the dividend. The dividend will pay at what rate? We're gonna pay using the value, which the value is 100,000, right?
Yes.
We multiply by the percentage, which is 8%.
8%.
And then were they issued for the whole year or half? Were they issued for the whole year, or they were issued half a year, or quarter a year, or 9 months, or 10 months? Liz David, were the shares issued for the whole year or partially?
I think for the whole year.
For the whole year, because the balance at the beginning is 100,000, so we don't have any shares extras here. So it means they were issued for the whole year. So we say 100,000 multiplied by 8% times 12 over 12. That is how much?
8,000.
So we say 8,000 is the preference shares to be paid. They're gonna reduce our retained earnings.
Retained earnings.
So we say minus 8,000. Then we go to the ordinary shares. On the ordinary shares, the shares issued is how much? Now we're gonna focus on the number. The number of shares issued. So the number of shares balance is how much? Balance at the beginning?
It was 500.
In number, right? And in the value was 500. And capitalization? Capitalization was how much?
80,000.
Number?
Was
80,000.
80,000. And also 80,000 in value, right?
Yes.
And the issue of shares? Number?
50,000.
1,000.
Value?
65.
Then the price is 180. Because you say you're gonna say 65 divided by 50,000 to give you 180. So now it means the total value, the total number of shares issued is how much? $680, right? But in value it was how much? It was 645. So now we're gonna say 680 multiplied by whatever amount they declare with. I didn't check it yet. We multiply by what value they were declaring the dividends. The last adjustment, I think. Let's see. I see it somewhere.
It wasn't 50 cents.
It was 5 cents.
5 cents.
Okay,
cents.
adjustment
Yeah,
number
5
8.
cents.
Adjustment number 8.
Yeah.
So 5 cents will be 0.05. So it says 680 multiplied by 0.05. It's 1,500.
1,500.
So up to so far, is there anyone who have a issue? Anyone who have a issue? Okay, let's see. One must also come here. We are all aligned up to so far. We are all aligned, right?
Yes, sir. So
Yes,
far.
sir.
So any question with regard to my statement of profit and loss, statement of change in equity? Any question? So now we can go to the statement of financial position. And I think we will see with time. We might do the asset section mostly. The statement of financial position.
Sir,
Mhm.
additional information number 13.
Yeah. The authorized share capital of Rainbow Limited 1 March. You're referring to that one.
Yes. We don't do
What's happening
anything
with
about it. We don't do anything about it.
No,
Why?
nothing.
Why?
They just tell us that this person, their intention is to issue 700,000 ordinary shares and to issue 250,000 preference shares. Done. But up to so far, they issued how much? They issued 630 ordinary shares, and preference shares, they issued only 100,000.
Okay.
If you want it to have an impact, that information, if you are so concerned about it, then you have to check the note for share capital. That is where that information you will see it. Check note number 5 on page 60. Do you see page 60, note number 5?
Oh, it's page 60. Okay.
Page 60. Note
Yeah,
number
I'm
5
page 60.
is where you're gonna see that information. If
Yeah.
you want it to write it somewhere,
Oh.
it's where it fits that information only.
Oh, okay.
For the statement of iniquity, we only focus on the issued. The issued is the one we focus on. If you can see that 630 ordinary shares of 645 is here. Here's your 645 in value, but the 630 number is here. Your 100,000, here it is on the issued.
Okay.
Cool. Sorry. Minimum financial position as at 8 Feb 2014. Assets. Non-current assets. Property, plant, and equipment. So before we reach here, we have to do that note because there's nothing that we can write here before you do the note. So let's do the note for PPE. building, land, the and delivery vehicle, carrying amount at the beginning, cost, what is the cost price of the building at the beginning of the year? From adjustment number 1.2 again. The existing land
150.
was purchased on 1 March 91 for this. The building at cost of 450 were completed on 1 March 92. So we are doing the books from 1 March 93 to 94. So it means this will be the cost price at the beginning. We are happy, right?
Yes.
Then the cost price of land, how much?
Land was 50,000.
50,000.
The cost price for machinery was 800,000, as given from the adjustment trial balance. The cost price for delivery vehicle, adjustment number 9. Read adjustment number 9.
The cost price was 20,000.
20,000?
Yeah,
Oh, wait.
20,000.
20,000, yes.
Now we go to the accumulated depreciation at the beginning of the year. For a building, what was the accumulated depreciation at the year? We have to calculate it now. They say the building was acquired for 450,000 and it depreciates at what rate?
2%.
2%.
Where is that 2%? I want to see it also.
Number 14.
Now 14.
Number 4, the bill is depreciated 2% per annum. Okay, so we will say 450 multiplied by 2%.
9,000.
9,000.
We are all happy, right?
Yes.
Land. Does land depreciate? No.
No.
Machinery and equipment. So
Uh,
read. The machinery and equipment, they gave us there's some that they gave us, I think.
Number 10.
Number 10. It's the Rainbow policy to depreciate the machinery and equipment at 20% per annum, according to the diminishing balance method. No purchase or sale of machinery took place. Okay. The machinery cost is 800,000. We've got accumulated depreciation as at 28 February, which is at the end of the year. At the end of the year, we have machinery and equipment at 400,000. And the build is sitting at 18,500. So remember, they say it's depreciating on the diminishing balance, right?
Uh, 140,000.
What is 140,000?
Accumulated depreciation.
How did you calculate?
No, it's just depreciation. Yes.
How did you calculate it, even that depreciation?
It's 240. I said 800,000 minus the depreciation, and then times the depreciation of machinery and equipment had 100,000.
Okay.
And then times 20%, and then I added the 100,000 to the 140 that I got.
There's no even need to go that much further. This is how to calculate it in a simple terms. Remember, you are given this, right? You are given the cost, and then the adjustment says no sale or purchases happened, right?
Yes.
So it means whatever cost that you have at the beginning is still gonna be the cost at the end. So you're gonna say the cost at the end is still 800,000. You are fine, right? And then now this will be the cost at the end. Now they say the accumulated depreciation on 28 February. Do you see that thing? Accumulated depreciation on 28 February 94 for machinery was 400,000. For building was 18,500. They are telling you. So it means here you're gonna say accumulated depreciation at the end. I'm given what? 400, ne?
Yes.
And then the one for building, they said is what? Build is sitting on 18,500. Means here you're gonna put 18,500. I will put the brackets later. I'm just doing the calculation for now so that we understand. Now we say if the accumulated depreciation is 400, and then there is another value which they gave us, I think. Let me check that value.
Number 7, depreciation of 100,000.
Number 7, ne?
Yes.
They say depreciation of 100,000 is sitting on machinery, right? So machinery depreciation somewhere in the middle on machinery is 100,000, right? Yeah. Now, this value is in the question mark for now. Right? So we know whatever value that is here, you add it with this one, it's gonna give you this one. It's true, right? In order to have accumulated depreciation at the end, you say the accumulated depreciation at the beginning plus depreciation, then it will give you accumulated depreciation at the end. Again.
Yes.
Now they didn't give you the accumulated depreciation at the beginning. They give you depreciation, they give you depreciation at the accumulated depreciation at the end.
At the end.
So in order to go to the beginning, you will say end minus depreciation, then you have this. Am I making sense that the value that we're gonna have here, it will come as a result of the 400,000 that we are given less the 100,000, which it will give us 300,000.
Yes.
So are we happy?
Yes, sir.
Okay, so it means now here we're gonna have 300,000 in brackets. So this will also be bracket. Okay. And this one will also be brackets. Okay. We are all fine. We happy, ne?
Yep.
So check another thing to have the value here. You can do this. You can say, suppose you don't want to use that method of say this minus this will give you this. You can do this. You can say, I will do it in orange or whatever color, brown. You're gonna do this. You will say we have a cost price, right? I mean, you have the cost price of the asset is how much, given as the 800,000, and then the accumulated depreciation at the end is 400,000, because this one is given. Remember, this one is given. So you will say the 400,000 of the accumulated depreciation, you multiply by, they say the asset it depreciates like 20% per annum, right? So it means the total is this, is 100%. And then this asset was purchased when? Did they tell us when it was purchased?
No.
Okay. So they didn't tell us anything that it was purchased, right? So depreciation at the end, it must be 100%. It means when it's 100%, it means that asset is fully utilized. So we say, they tell us that it's depreciated by 20% per annum. So you're gonna say less depreciation here of 20%. So the remaining is 80%. So arrive as the cost price, you will say my accumulated depreciation at the end multiply by 80%. 80% is this one. Multiply by 80 divided by 20. Because you wanted to reverse this figure to the figure here at the beginning. So when you say 400,000 times 80 divided by 20, it gives you how much?
$1,600,000.
Okay. Just hold on. I want to verify something here. Okay. I mixed up the numbers. It should be the 400,000 you multiply by 100, this one, in total. Multiply by total divided by the remaining part, because we assume that it depreciated by the 20%. So here it should be 400,000 multiplied by 100 divided by 80, which is going to give you 500,000. So the 100 is the total amount before it depreciates. The 80 represents the after you've taken the depreciation of 20%, this figure. Remember, depreciation here is 20% on the diminishing balance method. So you will say the 400,000 multiplied by 100 divided by 80 is 500. So the 500 will represent your carrying amount at the beginning here. Does it make sense? Because this less this will give you.
Yes, it does.
So that's another method of calculating this. If you don't want to use that method, my balance at the end minus my depreciation will give me accumulated depreciation at the beginning. So you can come up with another method where, okay, let me use the carrying amount. I will say my accumulated depreciation at the end multiplied by the total, which is 100%, divided by the 80, which is remaining, assuming depreciation is 20% per annum. Ne?
Yes.
Sorry?
Yes, sir, I
Fine.
got it.
Okay. So we can continue. We can continue. So we are fine with this calculation of ours. We can proceed. Now, do we have a accumulated depreciation in the beginning for delivery vehicle? I think I saw something somewhere. Okay, they say adjustment number 10. Remember, here's the balance at the beginning of 1 March Nandimang, or we say 2013. Ne? Read the adjustment number 10. It's number 10. Number 9. They say Rainbow Limited owned a delivery vehicle with which was sold on 1 March 93. So 1 March 93 will be regarded as our 1 March 2013. Ne? We are all happy here. Our dates that we use. So it was sold on 1 March 2013. The transaction was entered correctly in the books of Rainbow. The original cost of price of the asset was 20,000 and the carry amount on that date was 2,000. So if the carry amount was 2,000 here, yeah, they're telling us, right? So how much was accumulated depreciation?
I think it's 18.
So you say 20,000.
I said 20,000 minus that 2.
Then you have 8. Yeah,
Yes.
that's correct. That's correct. So we are done with the balances at the beginning, right? Is there anyone missing? None. Then we proceed. Things happen during the year. Now, normally they call them movements. One, revaluation. The land was revalued, right?
Yes, it was.
Yes.
By how much? I'm no longer calculating it. We did it already.
By 150.
150.
150.
Then, now let's calculate the depreciation for the year. Depreciation. But before you go to the depreciation, let's calculate. Okay, this I will put it here. We already done it here. Let's have additions if there is any. Which addition did we have?
It's not the land again.
Hallelujah. I doubt.
Building.
On the building.
On the building. It was transaction number 2.
Yeah, transaction number 2. Let's proceed. We did the revaluation to the value of 200,000 by Mr. White Sharp. No entry to record the revaluation was done. Now we record the revaluation. Since then, a modernizing program to the building for 150 was approved by the directors. However, work to the amount of 50,000 was completed and paid for at 31 August 93, while the contract to the value of 50,000 was already entered into the following accounting period. So the other 50,000 will go for another financial year. The addition already completed is how much? 50,000. So we'll say addition to the building is 50,000. Which was completed by which date? What, 31 August, right?
Yes.
Yes.
Now, let's calculate depreciation on building. Depreciation on the building, which is depreciating by what? By 2%, right?
Yes.
Now, depreciation calculation, I will put it, let me put it here. Depreciations for the year. Depreciations for the year, 1, building. Building. We have the 450 part, right? Before addition, I get it.
Yes.
So it will run from 1 March, it will be March, April, May, June, July, August, because the 50,000 was completed on 31 August. Again. So we'll have 450 times how much percentage we are using for building?
2.
2%.
450 times 2% times 6/12.
Which it give us how much?
It's give us 4.5.
0.5. Okay, sharp. Then the second part will be how much? It's no longer 450. It will be this plus this.
Sir, please wait.
Okay.
It would be 50.
For the 6
Wait,
over 12, isn't it supposed to be 7? I mean, it's August. I mean, September, October, November, December, January, February, March. It's 7 months.
How are you calculating your months?
I mean, for the depreciation.
It's completed
Okay.
to be paid on 31 August.
This thing was paid on 31 August, right? Let's do a timeline. Here is 103, 90 man, 93, right? And here is 81, 08, 93, ne?
93, yes.
So from here to here is how many months?
March, April, May, June, July, August. It's 6 months. It's 6 months.
Ne?
Yeah. I started calculating from September. That's why.
It's fine. Let's do it. Let's continue. Don't worry. It will be 6 months. Now, from 3108 to the financial year is ending when?
1 March.
Financial year is ending on 1 March.
On
28.
28 February. 28 February.
94, ne?
Mm.
Okay. Then from September to February is how many months again?
September to February. Oh, it's 6 months, yes.
Now, the first 6 months is this one. And this is the first 6 months.
Okay.
Then the second 6 months will be this one.
Oh, okay.
So now let's do the second 6 months. Now the bill is waiting how much?
500.
On the second 6 months, 500. So 500 multiplied by 2%, and multiplied by
12.
okay.
It's 5,000.
5,000.
5,000. Then the 5,000 plus 4,500, they're gonna give you how much?
9.5.
9,500 will be our depreciation for building for the year. You're fine. We are happy.
Yes.
So here's our 9,500. Then we proceed.
Sorry, sir.
Uh-huh.
I have a question. Can you please tell me how you got the 500,000 from 450?
The 500,000 from the 450.
Yes.
Oh, this one.
Yes.
The cost at the beginning was on we are on study guide
450.
page 50. It's page 50 something. We're on page 59, like that example 5. Okay, the calculation, yeah, 500,000 came as like this. We had cost at the beginning.
Yes.
Which was how much? They said the building had completed for 450 from adjustment number 2. Do you see that 450?
Yes.
Okay. 450. So they said, read. you will hear where they say work to the amount of 50,000 was completed and paid on 31 August. Do you see that
Yes.
information?
Yes, sir.
That's where the 50,000 come from now.
Oh, okay. Okay. All right. No.
And
thank
when you add them together, they will give you 500,000.
All right. Okay. I
So
got it.
the other 50,000, it must not confuse you. It will be for next financial year. It means it will be for 1 March 94 to 28 February 95. That other 50,000, the one they say, while content to the value of 50,000 was already entered into the following accounting period.
Oh, okay. Okay. Okay.
Yep.
Yes. Yes. Thank you.
Okay. Then we don't have a depreciation on land, it's 0. So delivery, yeah.
Depreciation for building was also given under adjustment number 7. Can we take from that side also? Depreciation.
Adjustment number 7.
Yes, sir.
Okay. Adjustment number 7. Depreciation, machinery equipment, 100,000, building 9.5. Yes, you can also take it there straight. But me, I wanted to show you now how did we arrive to 9.5. Because remember, in exam, they were not going to give it straight. They wanted you to work it out.
Yes, sir.
So me, I was working it out so that you can see how did we arrive at 9.5.
Okay. Thank you, sir.
All right. Ready? Then delivery vehicle. What happened to this delivery vehicle? As per adjustment number 9. Sarah,
It was sold.
it was sold. On which date?
1 March.
On 1 March
On 1
2013.
Okay. So
That's a disposal.
since it was sold, does it depreciate? Did it depreciate?
Yes.
By what?
Oh. No.
No.
Yes. Before
No, it wasn't.
before we sell it, isn't it supposed to depreciate?
Yeah, it can depreciate before you sell it, but depending on which date you sold it.
No.
In this case, it was sold here. It was sold on the 1 March.
At the beginning of.
It was not sold in the middle. If it was sold in the middle, we're gonna.
It was sold in the
before we
beginning.
sell it. But since it was sold at the beginning, you can't depreciate on the same day while you are selling it today. Like we closed the book yesterday, we opened the book today, then we sell it. You can't depreciate it.
Yeah, I see that. Thanks.
So it means depreciation here is 0. You're still fine. I guess so. Now we're gonna have disposal. Disposal. What did we sell during the year?
We sell a vehicle at the beginning. And it
sold
was
the
disposal.
vehicle.
It's 2,000.
So we sell it at the carrying amount. When you sell at the carrying amount. So you're gonna say minus 2,000 because it was waiting 2,000 at that day. We are fine. Disposal is always at carrying amount. Note that. Disposal at carrying amount. So it means if it was sold during the year, you first have to calculate depreciation during the year. Then you say you are carrying amount at the beginning minus depreciation that happened during the year. And then you have your carrying amount at that moment when you are selling it. Then that carrying amount at that moment when you are selling it will be the one to be disclosed here. Suppose we just take this further. Let's say, now out of this example, let's say we had 2,000 here. We have 20,000. We have 18,000. Now they say this asset was sold on 30 April 1993, right? So they selling this, they sold asset on 30/04 1993. I will just use 93 so that we just get confused. But we know normally we're supposed to use 2030. So we will say, and the depreciation is calculated at what? As per adjustment? Or they didn't mention it at all? I don't think they did. But we will say, let's say it's calculated at 5% on the carrying amount. We just assume. And depreciation is 5% on diminishing balance. So we're gonna have to calculate the depreciation now. Our depreciation, it was gonna be 2,000 because it's the carrying amount, remember, right? We multiply by 5%, multiply by month. How many months it was in use? It was used in March and April, right?
2 months.
Then 2 divided by 12. So how much is the value? Calculate for me, please.
R16.67.
67.
R16.67.
Yeah, 16 rand 67. Then let's just round it to the nearest to be 17 to cut the story short. Then we're gonna say depreciation, yeah, this thing is 17. And then after we say disposal at the carrying amount will be 2,000 minus 17. So the disposal here was gonna be 1983. It makes sense, this extra year that I'm showing here. It's not part of the question. I was just elaborating. Suppose the asset was sold after the beginning of the year, maybe after 2 months, 3 months, 6 months, 9 months, depending on the situation. Does it make sense, this carrying amount at disposal?
Yes, sir.
All right, I'm gonna delete it so it doesn't confuse us. Then disposal. Then from there, we have, what else is missing? Nothing, ne? Now we have to do the balance at
Yes.
the end. We have to do the balance at the end. So we're gonna have the carrying amount at the end, which is already shown here. We have, so we're gonna say carrying amount at end of the year. So our cost for building is how much?
It's
At the end of the year,
50,000.
500.
it's 50,000.
500,000.
Our cost is
500,000.
500.
500,000. Accumulated depreciation is 18,500. Remember, the 18,500 was given. Remember, ne? This was given.
Yes.
But when you want to verify it, you will say 9,000 plus 9.5, it will give you 18,500. True, right?
Yes.
This plus this will give you this.
Yes.
0. So there is no land, it doesn't depreciate, it's still 0 here. So our cost for land is how much?
It's 200.
Mana warasa. And then can you mute a little bit because the child is making noise? And then for here we're given everything's in order. Delivery vehicle is now sitting at 0 because it was sold. Okay. So here you say 500 minus 18.5, it gives you 481, 500. Here it will be 200,000. Here it will be 400,000. And here it will be 1081, 500. So you know this figure is the one that we're gonna use for our thingy here. PPE it will be 1081. We are happy.
Yes, sir.
Okay. I want us to complete this, the asset section. Investment in subsidiary, it will be the next item. Adjustment number 4.1. How much was investment in subsidiary? They say Abidjan, a subsidiary of Rainbow, 10,000 ordinary shares, market value 30,000. So it means here it will be 30,000. We are fine.
Yes.
We are fine. Then financial.
Yes.
Financial asset, we're gonna take the market value of those assets which they were of those shares which they were acquired for, not for speculative. You still remember those shares acquired not for speculative. There were two shares. The other one was acquired for speculative. The other one was not for speculative. So the one which was not for speculative, it was for adjustment number one. Adjustment number 4.1, 4.2, and 4.3. Which one are we taking here? 4.2.
2.
4.3.
3. I'm sorry.
4.2 is for selling purposes, both for speculative. Speculative is to sell. 4.3 was acquired not to be sold. It was for investment purposes. So we're gonna take the market value on that day. What was the market value? They acquired them for 16,000, but now they are within 20,000. Which one is the market value between 16 and 20?
20.
20.
Okay. And the difference between 60 and 20, where do we put it?
Um, 16, wasn't it in the statement of changes in equity?
I want to know the difference between 16,000 and 20,000. Where do we put it? That difference. And where does it go? What do we call it?
It was Put there by change of equity, go mark to market reserve.
And it was also affected where? It was also shown where?
It was also shown on profit and loss.
Here, right? In this line, right?
Yes.
So here, on the statement of profit and loss and the statement of change in equity, you take the difference. Note. On this one and this one, you take the difference. But on the statement of financial position, you take the value at the end of the year, the market value, which is 20,000. Happy? We are all happy, no? So when we add all these things, they will give us an amount of 11,31,500. So we proceed. Current assets. The current assets, we're gonna have inventories. Inventory. We're gonna have trade and other receivable. Trade and other receive. And then we're gonna have cash, financial assets. And cash if there is any. So let's see, inventory arena is straightforward the way it was presented as inventory. Inventory of the finished goods and work in progress is 46 plus 4. Do you see it from the pre-adjustment trial balance? Pre-adjustment trial balance, we have inventory, work in progress, inventory, finished goods. Do you see that?
Yes.
Still checking. Yeah, I see it now.
1,000, then they will give you 50,000. So trade and other receivable, we have how much value? We have trade and other receivable, we have an amount of
43,000.
43,000. So we're gonna add it with what? What are we expecting to receive? Dividend receivable
Dividends.
of 900 and 400, ne?
Yes.
We should give the value of how much?
44.3.
Then our other financial assets. The financial assets here it will be the shares acquired for trading purposes. Remember, here it was not for trading, it was for long-term purpose. This one is for trading. Short-term purposes. So the financial assets for short-term purposes will be which one? Market value is how much? Adjustment number 4.2, market value is how much?
40,000.
Market value. That one was the cost. We acquired them for 40,000. 1,000 ordinary shares acquired them for 40,000, and they were bought for speculative purposes. It was for trading.
Isn't it 50
rand per share.
50 rand?
50 rand
Yeah.
per share. It's
Yeah,
50,000.
50,000. Then What is another financial asset that we have?
It's the loan that we gave to the personnel.
Loan we gave it to who?
To the personnel.
Loan to personnel, yes, of 4,500 plus 4500. We are fine up to so far. So it will be 54,000. When we add this, they will give us 148. So our total asset will be this plus this. We are all happy up to so far with all the information presented. Are we happy? So I'm gonna stop here on the thing. I'm gonna stop on the because the share capital, we can also do it. It's not a big thing because we just take things from cinema profit and loss. Let's do the equity part. The equity and liability. So we're gonna have share or equity attributable to owners. We have share capital. We have retained earnings. So we have other comprehensive income. So our share capital, it will be how much? As for cinema profit and loss, we have 645. We're gonna say 645 plus 100,000 because we add both preference and share capital.
It's gonna be 745.
745.
1,000.
The retained earnings is how much? The retained earnings that we have.
It's 71. It's 71,532.
So our other comprehensive income, we have how much?
It's 154,000.
Which is this and this, ne? Okay.
Yes.
Then it will be the liabilities. So I'm not gonna do the part of the liabilities. I will request you to finish the liability part. So long-term borrowing, the financial net amortized cost, finish it. Then where you don't understand, mark it. Okay, I didn't understand this calculation. How did they arrive on this? Mark it on your note. Then you'll ask me when we meet on the next class before we proceed, because I want us to go to learning number 4 now, because we still have more things to do on learning number 5 and 6 and 7. So we are chasing time also. We can't do much on the learning number 3.